G'day everyone, welcome back to Pete's Investing. It's another update for natural gas. Now we've had a gap up to a minor resistance over the weekend. So before we go any further, make sure you hit that like and subscribe button to support the channel. But first, in terms of the outlook for natural gas demand, as of today, January 13, natural gas demand is rising, driven by increased consumption from AI data centres and technological advancements. This surge supports natural gas prices despite high inventory levels and policy shifts. For the ETFs, BOIL aims to deliver twice the daily performance of the Bloomberg Natural Gas Subindex, making it suitable for short-term traders seeking amplified exposure to natural gas price movements. For KOLD, seeks to achieve twice the inverse daily performance of the Bloomberg Natural Gas Subindex, appealing to traders anticipating declines in natural gas prices. The UNG tracks daily changes in natural gas spot prices through near-month future contracts, offering investors direct exposure to natural gas price fluctuations without leverage. In terms of the outlook, high volatility in leveraged ETFs like BOIL and KOLD makes them suitable for short-term trading only. Investors are also monitoring geopolitical tensions and seasonal weather impacts on natural gas prices. In terms of the AI data, the expansion of AI technologies is significantly increasing electricity consumption in data centers, with projections indicating that US data centers could consume up to 606 terawatt hours by 2030, representing 11.7% of total US power demand. This surge is expected to drive an additional 3 billion cubic feet per day of natural gas demand by the end of the decade. So as always, first we start off with the natural gas price on the long-term trends, and we look at the monthly, the weekly and the daily. And these indicators, by the way, for those new to the channel, are available in the description below should you wish to learn how to draw those on your own charting software. Reference them in the links below. So here we've got the monthly. The price is broken above the moving averages, giving us a bullish signal on the price, along with the CCI 150 also above its moving averages, so bullish on the monthly. On the weekly, it's been bullish now for some time. Nice big moves on both the price and the CCI. And on the daily, it's actually broken above the moving averages. It's been fluctuating above and below that on a daily, very volatile movement recently. And it's finally broken off, bounced off that minor support there at 32.16. It's gapped up and hit this minor resistance up at 38.78. Now, it may well get past that previous key support up there at 40.60, but to be more bullish, we'd like to see that break through that resistance. But at the moment, bullish on the daily, which means you can trade long trades only on the intraday. So if we go to the intraday charts, you can see there we've got the daily here as a reference, so bullish movement only. And you would have taken some bullish moves back here. So when that breaks above, this is the hourly chart, and you can interchange this with your own time frame, whether it's 2 hour, 4 hour, etc. So the way this works is when the price breaks above the moving average, but also the CCI is above the moving average, and the daily in this case is bullish, you take long trades, and I prefer to close it out when the CCI breaks into that moving average. So you would have gone long at the close of that candle, enter there, and you would have closed it out on that candle there if you're watching this on the hourly. So you would have gained 1.39% in 7 hours on that little trade there. The next entry would have been when it broke above there again out of the CCI. So you would have entered again there, and you follow the CCI. Now this one just touched the moving average. You could have gone up, bounced off that moving average. You possibly would have closed it out there as well, but then it gapped up, and at the moment it's touching that moving average again. So if you're in this trade here, probably wise to take your profits, and that's a good 9.08% gain in 24 hours. So it's not too bad of a return so far. So for BOIL on the monthly, it's bearish. You can see it's below the moving average of the price chart. There is no CCI indicated for it. On the weekly, this has been a bullish divergence for a long period now, since around the start of 2023. The CCI has been moving higher versus lower lows on the price. Now, we'd like to see this break a lot higher with this band of moving averages starting to turn up like it did back here, for example. I'd like to see a nice widening of the moving averages in an upswing. That's probably a bit too early at the moment, but at the moment it's bullish movement on the CCI with probably a fresh breakout to the upside, and maybe starting in an upswing on the weekly. We'll keep an eye on that. On the daily, again, that's been bullish now last few days. It broke into, so you would have gone long, again going long in accordance with the weekly. So you would have gone long on that candle there, and I've drawn a little measurement tool there. So on the daily, this is the daily chart. So you close it out when the daily breaks into that moving average band at the close of that candle, and that was an 8.1% gain in 14 days. you would have gone long again, one of those candles there, and you'd still be in a trade at the moment. Notice the CCI is high. That's gapped up over the weekend to that key resistance out there at 64.65. So bullish on the daily. If you go to the intraday charts, we only take long trades. So that would have been a false break back there, and you would have probably closed that out with a stop loss. Here you would have had another entry, and at the close of that candle, enter it, and you'd be probably close to closing it now when it's hit this resistance at 64.65, and this is on the hourly chart. So very close to closing it. Just be careful, and these ones you want to be careful it doesn't sort of have a massive bear candle. But so far it's gained 7.66% in those in 12 hours of trade. So KOLD's got the inverse. Now you'll notice here the moving averages have been breached, and it's gone into a bearish momentum at the moment on the monthly. There's no CCI for it drawn, or is starting to draw on the monthly. So, but only at the moment on the price chart, it's broken to a downside. On the weekly, it's been bearish now for a number of weeks, well below its moving average of the price, and also just a breakout below those moving averages of the CCI. And on the daily, again, you can see there you would have gone short, and I've drawn a measurement tool here. You probably would have closed it out when it touched that moving average band there, and you would have gained, this is on a daily, you would have gained 23% in 15 days. Or if you kept holding it, or alternatively, you would have probably started another entry there, depending on how you played this. So you would have closed it at one entry there and opened up another entry there, or and that would have been. And currently, it's still open at the moment. Still, it's a 16.7% drop on that one. Or if you extended that one down to that point, if you still got it open, that would have been a 40% gain so far on that trade, depending on which method you used. Now that's the daily. If you go to the intraday, again, we only take short trades. So you would have probably had a little stop loss on that one there when it broke below on the 1 hour time frame. Don't go long, and you would have taken another short entry there at the open of that candle there, or the close of that candle. And you'd still be in the trade, actually, just about to close it out, a 13.3% gain in 9 hours on this one. So that's not a bad trade as well. So for UNG on the monthly, now this is broken up on the CCI into a bullish momentum. The price is still below its moving averages, but making some progress. So just probably cautionary in terms of going long on the monthly there. On the weekly, we do have another bullish divergence here, higher lows on the CCI, and that's been a very long term since the start of 2023. A very long-term bullish momentum on the CCI versus lower lows on the price. And again, this hasn't really broken a lot higher. We're starting to widen on the moving averages. I'd like to see that go a bit higher as well, probably breach that previous high to be more bullish. But that's on the weekly. And on the daily, if you're trading on the daily based on the weekly being bullish, again, you would have gone long at the close of that candle. Then I've drawn another measurement tool here. You would have closed it out when it broke within that moving average range at the close of that candle, and that was a 7.7% gain in 15 days. You would have had another entry there. Now you could have done a couple of things here. You would have had another entry there. You could have closed it out with a stop loss, and then re-enter again with another entry there on that one, and you'd still be in a trade on this one. And at the moment, you'd be up about 7.5% on the daily. Now, if we go to the intraday charts, taking long trades only in direction of the daily. So you would have gone long possibly on that one. That would have been a small stop loss on that one, similar to the other charts. Enter another long entry on that one on the 1 hour, and you're just about to close it out when it hits that moving average range in there. So at the moment, you're up about 8.4% in 9 hours of trade, so not a bad trade as well. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.